Most people think interest is simple, a small extra cost for borrowing money. But the reality is far more complex. Banks use hidden interest structures to trap consumers, turning what seems manageable into long-term financial burdens. Interest is rarely just a percentage on the principal. It accumulates, compounds, and is often structured to maximize profit over time. The way it is presented on statements, contracts, and offers is designed to appear smaller than it actually is. Credit cards are the perfect example. The low introductory rates, minimum payments, and delayed statements give the illusion of control. People feel like they are making progress. But in reality, the debt often grows quietly under the surface. Even loans that seem straightforward, like personal loans or car financing, can carry hidden costs. Late fees, processing fees, compounding interest, and variable rates all increase the true cost of borrowing. Most borrowers never see the full picture until it's too late. Banks rely on a lack of financial literacy. They know most consumers do not calculate the long-term impact of interest. They know minimum payments are psychologically satisfying, but financially damaging. They know that delayed consequences make it easier to borrow without resistance. Interest is a powerful tool. It ensures predictable revenue for banks while creating cycles of dependency for borrowers. Even responsible, cautious individuals can find themselves paying far more than they expected, simply because the system is designed to obscure the truth. The wealthy understand the system. They calculate every potential cost, anticipate interest accumulation, and structure borrowing strategically. They know when borrowing creates opportunity and when it destroys value. Most people, however, are trapped in the opposite cycle. They borrow without full understanding, repay slowly, and accumulate hidden costs. Debt becomes a long-term anchor rather than a temporary tool. Compound interest is one of the most misunderstood elements. While it is celebrated in investing, it is feared in debt. Banks use it to their advantage, allowing interest to build on top of interest, often invisibly. By the time most people recognize the magnitude, they are years behind. Credit card minimum payments are a classic example. Paying only a small portion each month may feel responsible, but the majority goes toward interest. The principal decreases slowly, and the debt often takes decades to eliminate, even with steady payments. The system is designed to be convenient, comfortable, and seemingly fair. Automatic payments, digital apps, and online statements create a sense of control. But hidden in these conveniences are traps, interest structures that quietly increase the cost of borrowing over time. Financial literacy is the key to escaping this trap. Understanding how interest is calculated, how it compounds, and how fees are applied allows you to make strategic decisions. It turns a system that profits from ignorance into a tool you can use advantageously. There is also a psychological element. Humans tend to focus on immediate needs and underestimate long-term costs. Banks exploit this by offering instant access to funds, easy repayment plans, and incentives to borrow more. The result is predictable behavior that benefits the institution. The wealthy avoid these traps by planning strategically. They borrow only when it multiplies their wealth. They avoid high-interest consumer debt. They calculate the true cost of every loan and payment. And they use interest to their advantage, rather than letting it work against them. Most people, however, continue to make the same mistakes. They treat interest as a minor inconvenience, not as a powerful force that can either erode wealth or accelerate it depending on knowledge and strategy. Awareness is a first step. Once you see how hidden interest operates, you can make informed choices. You can prioritize repayment of high-interest debt, leverage low-interest borrowing strategically, and avoid unnecessary financial traps. The system will continue to be structured in a way that profits from hidden interest. Credit cards, loans, and financial products will always include subtle complexities that favor the lender. But understanding these mechanisms allows you to reclaim control. Knowledge transforms interest from an enemy into a manageable factor. It allows you to make deliberate choices, reduce unnecessary costs, and position your finances for growth rather than decline. The difference between financial struggle and financial freedom often comes down to understanding interest. Those who grasp it calculate it and act strategically leverage it to their advantage. Those who ignore it remain trapped, paying far more than they realize. Banks will always need interest to profit. The system is built to benefit them. But with awareness, knowledge, and deliberate action, the power of hidden interest can be neutralized and financial control restored. Once you understand how interest works, the fear and uncertainty surrounding borrowing disappear. You gain clarity. You gain freedom. And the same system that traps most people becomes a tool for strategic financial growth. In the next video, I'll explain how banks manipulate your spending habits with rewards and incentives. Tricks most people never notice until it's too late.